It began as whispers in late September, faint signals across private financial circles, insider forums, and encrypted chat groups. But now, those whispers have turned into a global roar. Tier 4B sources, the private exchange groups long waiting for this very moment, are confirming that the long-anticipated revaluation of the Iraqi Dinar, IQD, and Vietnamese Dong, VND, has been finalized behind the scenes. A historic celebration has been set for October 20, marking what insiders describe as a monumental day in modern financial history. The announcement, still under tight control by international banking systems, is being verified through multiple channels, from private banking networks to high-level treasury liaisons in the US, Europe, and the Middle East. This event, if confirmed publicly in the coming days, could represent one of the largest currency realignments ever seen since the Bretton Woods reforms. For years, analysts and investors dismissed the RV as speculation or internet folklore, a distant dream for hopeful holders of exotic currencies. But now, concrete evidence is surfacing: transaction readiness, digital platform activations, and reports of liquidity movement among Tier 4B participants all point to the same conclusion. Something extraordinary is unfolding, and it's real. According to credible reports, several private exchange centers in the United States and Europe have been quietly preparing for weeks, testing new rate integration systems that connect directly to the quantum financial system. Bank insiders, speaking under confidentiality agreements, have described live rate placeholders appearing temporarily on internal screens, only to vanish moments later, a clear sign of systems being calibrated for final implementation. Iraq's central bank, meanwhile, has been notably active, tightening monetary supply, strengthening the dinar through increased gold and foreign currency reserves, and cooperating closely with international auditors to ensure stability before public disclosure. In Vietnam, the central bank has continued to roll out digital reforms and financial compliance upgrades that match those seen in Iraq, signaling coordination at a global level rather than coincidence. Experts observing the situation have noted a distinct shift in tone from global institutions. The International Monetary Fund, World Bank, and several regional development authorities have subtly adjusted their public communications, emphasizing currency modernization and digital realignment initiatives without directly referencing the revaluation. This coded language, familiar to those following long-term currency reform, suggests that behind closed doors, agreements have been reached, and the world's financial architecture is about to adjust accordingly. The U.S. Treasury, too, has been unusually quiet, issuing no denials, which seasoned watchers interpret as confirmation through silence. The timing, coming amid major geopolitical restructuring in the Middle East and Asia, appears intentional. What makes this moment so significant is not merely the potential increase in currency value. What it symbolizes: a shift toward economic sovereignty and transparency for nations once burdened by sanctions, inflation, and instability. Iraq's recovery has been long and painful, steady, driven by growing oil output, expanded infrastructure, and a newfound independence from foreign intermediaries. The revaluation of the IQD would mark its emergence as a legitimate regional powerhouse, capable of sustaining its economy through trade rather than dependence. Likewise, Vietnam's VND, long kept low to favor exports, now finds itself in a position where growth and foreign investment demand a more balanced valuation. A recalibration of the Dong would reflect the country's true economic strength and open pathways for greater international confidence. As of this week, credible sources claim that certain Tier 4B participants, individuals and groups pre-approved for private exchanges, have received confirmations to be on standby for appointment scheduling shortly after October 20. Security protocols remain strict and details are limited, but the overall tone has shifted from rumor to readiness. Private bankers are reportedly being briefed on non-disclosure terms, exchange procedures, and compliance standards under international anti-laundering regulations. The coordinated nature of these activities across multiple continents suggests this is no longer theoretical. Something concrete is being prepared, something major enough to alter global financial flows in real time. And yet, amidst the rising anticipation, the official world remains silent. No mainstream financial network has yet issued a formal statement, though analysts quietly admit that the data points are aligning too perfectly to ignore. This silence, rather than dampening the excitement, has only intensified it. History often records that world-changing financial events begin this way, quietly, cautiously, and beneath the surface. If October 20 indeed marks the public confirmation of this revaluation, it will not just be a day for Tier 4B, it will be remembered as a day that redefined modern monetary structure. For now, the global financial stage stands still, holding its breath as the countdown to the 20th of October continues, a date that may soon be etched in economic history. As the calendar edges closer to October 20, anticipation across financial and private exchange networks continues to intensify. Analysts describe the current climate as one of coordinated quiet, where silence speaks louder than any public statement. The indicators of preparation are visible to those who know where to look. Cross-border settlement systems have reported uncharacteristic testing traffic. Currency monitoring platforms have detected temporary rate fluctuations at unconventional hours, and high net worth investor groups have begun receiving encrypted briefings hinting that activation windows are imminent. Such developments suggest that the long-anticipated RV, the revaluation of the Iraqi Dinar, IQD and Vietnamese Dong VND, is now entering its final pre-release phase. The most consistent reports point toward October 20 as the official start of celebratory acknowledgments, where confirmation from Tier 4B participants is expected to surface through authorized channels, signaling that transactional liquidity has begun. Observers describe this unfolding moment as the culmination of years of planning and negotiation involving multiple nations and international financial regulators. Iraq's revaluation process has reportedly been tied to its increased oil output capacity, a stronger trade balance, and significant foreign reserve growth. The Central Bank of Iraq has quietly fortified its gold holdings and diversified foreign assets, signaling financial stability and international trust. Economists point out that such steps usually precede large-scale monetary reforms, especially when a nation seeks to reintroduce its currency to the global stage with strength and credibility. Meanwhile, in Vietnam, a similar economic transformation has been underway. As one of Asia's fastest-growing manufacturing hubs, Vietnam's consistent GDP growth, rising foreign investments, and compliance with Basel III banking standards have positioned the Vietnamese Dong for a justified upward correction. Both nations have completed reforms demanded by international institutions, from anti-corruption enforcement to transparent fiscal reporting, further indicating alignment with a broader revaluation framework rather than isolated policy moves. Inside the private exchange community, commonly known as Tier 4B, preparation has taken a disciplined tone. Exchange centers in the United States, Canada, and parts of Europe have received updated compliance guidelines emphasizing verification protocols, identification standards, and strict non-disclosure policies. These steps are standard for sensitive financial events involving substantial asset conversion, yet their timing has drawn particular attention. Reports indicate that specific security measures, including biometric verification and pre-screen scheduling, are now being implemented. Insiders have described the overall mood as calm but electric, the feeling that something monumental is set in motion but must unfold within carefully managed boundaries. This is not the behavior of a rumor-driven operation, but rather a controlled execution of a pre-planned financial rollout. Economists monitoring these developments remind the public to interpret events cautiously, but acknowledge that multiple independent data points now align with the theory of an imminent RV activation. Satellite trade data shows increased Iraqi oil exports settled in foreign accounts over the last month, with unusual volume spikes in non-dollar transactions. Vietnam's trade receipts have likewise seen a steady rise, hinting at stronger currency confidence among international partners. Furthermore, several major banks, including regional entities in the Middle East and Asia, have quietly updated internal rate sheets for IQD and VND, reportedly reflecting pending status markers. While not public, such updates historically precede rate releases when a currency is being recalibrated in global markets. Political stability has also been a major factor in the timing of this event. In Iraq, the government under President Abdul Latif Rashid and Prime Minister Maham Shia al-Sudani has worked diligently to maintain internal peace, secure foreign investment agreements, and strengthen cooperation with the U.S. Treasury and international oil companies. These steps have reinforced Iraq's credibility as a secure investment destination, a prerequisite for any successful currency revaluation. In Vietnam, strong fiscal governance and prudent inflation management have kept the economy resilient amid global turbulence. Experts note that both countries' recent moves mirror a global shift toward asset-backed, transparent, and digitally traceable monetary systems, precisely the kind of environment where revaluations can be safely executed. Behind the scenes, the technological infrastructure supporting this event is also being finalized. Financial technology teams linked to the quantum financial system and related clearing networks have been conducting 24-hour readiness tests. These systems are designed to facilitate instant cross-border transactions, ensuring liquidity flow once the new rates are live. According to insiders, these stress tests have been ongoing since early October, with successful results reported over the past 72 hours. The synchronization of these efforts across banking jurisdictions suggests that coordination is not theoretical but actively operational. Still, officials and economists emphasize that the final public acknowledgement must come through official government and banking statements to avoid misinformation. Yet, every sign, from market data to geopolitical timing, indicates a synchronized effort toward that direction. October 20, described by insiders as Activation Day, appears positioned not just as a symbolic celebration, but as a date of actual transition where select private exchanges begin and global recognition follows. If the pattern holds, Tier 4B will mark the first phase, setting in motion a domino effect that gradually brings the IQD and VND into adjusted parity with international trade valuations. For now, the atmosphere remains charged with quiet confidence. Investors, analysts, and currency holders watch cautiously, knowing that each passing day brings them closer to a historic shift. The next few days will determine whether this extraordinary buildup transforms into the public reality that so many have anticipated for years. The evidence, though still awaiting formal declaration, continues to mount, and all roads seem to lead toward October 20, a date now carrying the weight of global financial expectation. As the global financial world turns its attention toward October 20, the atmosphere surrounding the reported revaluation of the Iraqi Dinar's IQD and Vietnamese Dong, VND, has entered a phase of measured intensity. While Tier 4B insiders quietly prepare for what they describe as unprecedented private exchange event, the broader financial community watches with cautious curiosity, aware that even subtle shifts in currency valuation can ripple across international markets. What sets this situation apart from past rumors is the undeniable coordination of evidence. The alignment between government fiscal behavior, banking readiness, and international monetary policy adjustments. Iraq's central bank continues to project stability through its public communications, emphasizing digital modernization and the strengthening of monetary reserves. These are not the actions of a country drifting towards speculation, but a one positioning itself for economic sovereignty. Similarly, Vietnam's disciplined management of trade flows and adherence to global banking standards suggests that this revaluation, if confirmed, is the product of long-term structural reform rather than sudden political whim. Market analysts have begun to outline potential implications should the RV be publicly acknowledged. A strengthened IQD could drastically alter Iraq's import-to-export balance, reducing dependency on US dollar transactions and boosting national purchasing power. For citizens, such a move could translate into increased domestic confidence and foreign investment, potentially stabilizing sectors that have struggled since the early 2000s. Vietnam's case is equally compelling. A higher value dong could enhance consumer purchasing capacity while simultaneously recalibrating the country's export competitiveness. Economists predict that Vietnam's government would likely employ measured exchange controls to prevent sudden inflationary surges, ensuring the adjustment remains sustainable. In both cases, the revaluation would not just represent a currency event, but a reflection of national maturation, an arrival into economic adulthood for two countries that have navigated decades of financial rebuilding. Financial observers from Europe and Asia have noted a surge in institutional inquiries about emerging market alignment, a term often used when major players anticipate upcoming shifts in regional currency structures. The World Bank's recent report on Middle Eastern economic resilience made veiled references to Iraq's rising monetary independence, while IMF bulletins have subtly hinted at the readjustment of undervalued assets in Southeast Asia. None of these mentions confirm the revaluation outright, but taken together, they build a picture of synchronized awareness among global institutions. The fact that no major denial has been issued by the U.S. Treasury or international monetary agencies has only reinforced the perception that events are progressing according to a predetermined plan. Historically, such silence precedes major policy confirmations, allowing systems to finalize readiness before the flood of public attention begins. Technological indicators also continue to reflect increasing activity. Global payment networks are registering unusual pre-clearance patterns, often used to test liquidity pathways ahead of live operations. In the Middle East, regional banking hubs have initiated 24-hour transaction windows, ensuring real-time monitoring of international transfers. Financial technology consultants have confirmed that the quantum financial system, reportedly designed to provide transparent, secure, and traceable settlements, has been running stress evaluation since early October. While officials remain reserved, industry insiders suggest that October 20 could mark the completion of this testing cycle, the moment when systems transition from simulation to active status. If accurate, this would align perfectly with reports of Tier 4B appointment scheduling and private liquidity confirmations. The global reaction, though muted, is expected to be swift once public acknowledgement occurs. Foreign exchange markets, already sensitive to geopolitical developments, could experience volatility as traders reassess currency baskets and hedge fund managers reposition portfolios to account for the new valuations. A revalued IQD could see immediate interest from regional trade partners, especially in energy transactions, potentially diminishing the dollar's monopoly over Iraq's oil settlements. Vietnam, on the other hand, could attract a wave of manufacturing and technology investments as a stronger dong signals long-term economic confidence. Yet, experts caution that the initial surge of enthusiasm must be balanced with realism. The global monetary system is vast, and while the RV may symbolize a reset for certain sectors, it will not overturn international equilibrium overnight. Sustainable impact will depend on continued fiscal discipline and transparent implementation by both nations. In the midst of all this, Tier 4B participants, individuals and groups pre-cleared for private exchanges, remain the silent witnesses of a story unfolding before the rest of the world. Reports indicate that most have been instructed to maintain confidentiality, avoid speculative communication, and prepare for secure, verified transactions within days of official confirmation. Their patience, stretched across years of anticipation, now rests on the edge of realization. The October 20 celebration, according to credible insiders, will not merely be symbolic. It is expected to mark the initiation of an official acknowledgement period, potentially accompanied by discrete statements from participating governments. Should that happen, it would validate years of quiet planning, negotiations, and behind-the-scenes coordination between central banks and global regulators. As the world stands on the threshold of this potential transformation, the tone among analysts remains cautiously optimistic but distinctly serious. The revaluation, if indeed confirmed and executed, will not just alter the fortunes of currency holders, but could set a precedent for how undervalued economies reclaim parity in the global financial order. For decades, discussions about the RV have floated between myth and reality. But now, with credible signals aligning across multiple fronts, reality appears to be taking the lead. The next few days could define not just financial history, but human history in terms of wealth redistribution, national empowerment, and global economic balance. And as the countdown continues toward October 20, one truth stands clear. The eyes of the world are watching. For millions who have followed this story with patience, doubt, and hope, the coming hours may finally deliver the long-awaited confirmation. Whether this event reshapes personal fortunes or rewrites the narrative of global economics, one thing is certain: history is about to turn a page. Stay tuned, stay alert, and stay informed, because the world may soon awaken to a financial reality unlike any before it.